Hey guys, it's your favorite realtor and investment property strategist, Adele Forbes with eXp Realty with the Forbes Report. Today we're taking a look at the housing market for November 2021. We will review national statistics and trends. We'll also take a look and highlight what's going on for us locally here in Georgia. We're also going to take a look at what we can expect to see in the year ahead. Let's start by taking a look at this chart provided by ShowingTime that shows us the most updated or recent data. And this compares, if you look year over year, this chart shows us that as of September, we were just slightly below. This is September last year, 2020. And here we are, September of 2021. So we're just slightly below of where we were year to date. And keep in mind that these charts or the information that I share, there is a bit of a lag time since we do wait a bit or want to give all of the various housing industries an opportunity to report all of the data. As a result, there is just a bit of a lag time, but this is the most recent data provided to us. So this is where we are as of September 2021. And as you can see, we're just slightly below where we were year to date as of September 2020. And to further highlight that point, you can see, so this chart also provided by ShowingTime shows us the numbers for the past 5 Septembers. So if we look back to 2017 and through 2021, September 2021, we are beating all of the previous normal years in real estate. Keep in mind that last year was an anomaly. The world basically came to a pause as a result of the pandemic. So this was last year during the pandemic, September. This is the amount of showings for September that was reported by ShowingTime. And here we are, September 2021. That shows that we're just slightly below 2020, which was an abnormal year. So if we really want to compare apples to apples and look at the last normal years, or the most recent normal year would have been 2019. And even if we look back to previous years before, you can see that the housing market is alive and well. And those numbers are coming in pretty strong in comparison. Here we have a quote from Bill McBride of Calculated Risk that further highlights that point. Bill says that sales, non-seasonally adjusted in September, those sales were 548,000, were 2.7 below sales in September of 2020, which those sales were 563,000. That's excluding last September, which was distorted by the delayed selling season. Sales non-seasonally adjusted were the strongest since 2005. As the market continues to shift and you continue to educate yourselves, I just want to remind everyone to be aware of clickbait headlines. Here we can see an article that was posted on realtor.com. And this is not to, point out realtor.com because there are other sites that also do the same thing. However, this article had stated that foreclosures are shooting up. Is this a repeat of the early 2000s housing crisis? If you were to just focus on the headline and not read the fine print of this article, It's actually very misleading. That's why I just wanted to point this out and to remind everyone to be sure to read beyond the headlines of any article that you may come across, because we don't want you making important decisions based off of misinformation. And unfortunately, many people just read the headlines and take whatever the headline says as fact when the details are really beyond the headlines. And it's not that the information is inaccurate. Foreclosure starts were up 49% over last year. However, if you look on this chart, you will see that August of 2019 shows that there were 28,000 foreclosures compared to August of 2021, our current year, which is just over 8,000. And I've also shown you here that August of 2020 was 5,603. So that's where the kind of, yeah, foreclosures are up. So if we compare 2020 to 2021, we can see that those numbers have increased. And just by looking at it, it seems very shocking. But given the fact that we last year was an abnormal year, not just in the real estate industry, but in every industry, this number is not unusual. It shouldn't be shocking, especially since the moratorium has recently been lifted. And more than likely, we will continue to see this number go up as we try to normalize the housing market. Here's another article that was posted on CNBC that stated refinance originations will drop 62% in 2022 to 860 billion. However, mortgage originations for the purpose of buying a home are forecast to rise 9% to a record of 1.73 trillion in 2022. Now, this that's highlighted in the blue is what was in the detail of the article. However, the headline read, mortgage originations will drop in 2022 about 33% as interest rates rise, according to industry forecasts. So, at first glance, this headline, just like the others, can make it seem like the sky is falling. But once you get into to the details of the article, which is highlighted in blue, you can see the actual facts of what that headline is really referring to. And this actually makes sense because in an environment where interest rates are increasing, it's not beneficial for homeowners to refinance. And the article, as mentioned, does go on to say that mortgage rates for buying a home will, for buying a home are forecast to rise to a record 9% of the 1.73 trillion in 2022. But these are just some examples that show that the headline doesn't inform the reader of what's really going on. You have to go into the article and actually read the details. And it's unfortunate that most people don't take the time to do this. They look at the headlines, make assumptions, and conclude what they think that the article is saying. And again, this is unfortunate since it leads to mass confusion. This chart shows us a prime example of mass confusion. And what you're looking at is consumer sentiments when asked if now is a good time to buy a home. You can see that what the numbers were in February of 2020, the sentiments were 70% of consumers thought that now was a good time to buy a home. Then we move on to September of 2020. That dropped by 5%. And then the most recent data, September of 2021, that number dropped dramatically to 32%. As mentioned, I feel that a lot of this is due to misinformation and just what we were talking about just now, where people read the headlines and fail to read the details of the article and make decisions or make assumptions based on headlines that they read, which results, unfortunately, in mass confusion. Here's a quote from Doug Duncan, Senior VP and Chief Economist of Fannie Mae, who stated that right now we forecast mortgage rates to average 3.3% in 2022, which, though slightly higher than 2020 and 2021, by historical standards remains extremely low and supportive of consumer demand and affordability. The next few slides will show a breakdown of interest rates and where they are slated or where they are trending to head. Here you can see a breakdown of interest rates trends of where they were in the past and where they are as of the fourth quarter of 2021, which was just over 3%. And you can see as we head into next year, where interest rates are trending. You can see the breakdown from the first quarter throughout the third quarter. So, as mentioned earlier in this report, I mentioned that interest rates will be rising by 0.5% by mid 2022. And here just shows a more granular, or should I say, a better breakdown of where interest rates are trending, and you can see compared to where they were before, it is still very much affordable for consumers to afford a mortgage and purchase a home. Now that we've taken a look at interest rates, let's take a look at where home prices are slated to trend in the year ahead. Here, this chart shows you the reporting from the various housing industries and industry experts. You can see that home prices will continue to rise. However, these numbers are lower than where we were last year. Last year, home prices were appreciating at just under 20%. And as we head into 2022, or 2022, should I say, shows that those numbers are lower. However, home prices will continue to appreciate. With that being said, with prices continuing to increase as well as mortgage rates, coupled with the fact that inventory is still low, it will cost you more to buy a home should you decide to wait. Now that we've covered the housing market trends on a national level, let's take a look at what's going on for us locally here in Georgia. Despite labor shortages and supply chain disruptions, the housing market in Georgia remains very healthy. It's still a seller's market. We're still experiencing low inventory and high buyer demand. As a result, increased home prices. And here I have some quick facts on this chart for you. However, in the following slides, you will note that the median sales price increased by 16% to $305,000. The average sales price increased by 12% to $360,521. Days on market decreased by 49% to 24 days, and the month supply of inventory is down 29% to 1.5 months. To summarize, there is still an inventory demand imbalance with limited inventory and increased buyer demand. This is the result or the reason why home prices continue to rise, and home prices will continue to go up into next year, however, at a slower pace. Another point we mentioned is that interest rates will increase by 0.5% by mid-2022. With all of these dynamics, it will cost you more to buy a home if you decide to wait until next year or over the next couple of years. Overall, we're still in a very strong seller's market nationally as well as locally here in Georgia. As always, it is my goal to provide clarity around what's really going on in the housing market. The information that I share with you is sourced from industry experts, and if you would like a copy of the full report, please don't hesitate to contact me. Also, if you would like a report of what's going on in your city or neighborhood or your immediate area, I'm happy to provide that information as well. My contact information is provided in the description below as well as within the slides of this video. Until next time, that's all for now. Take good care.